Last week, we said the SP 500 and the Nasdaq 100 could accelerate to the downside and reverse back up after the FOMC announcement. We also said the dollar and the 10-year yield are telling us possible further rate hike is in store, and maybe not in this meeting, but could be in a future meeting. And the latest dot plot from the Fed indicated that 2 additional rate hikes are possible. In addition, we said inflation will not come down until oil prices come down, and oil broke above $92 a barrel last week. With a hawkish statement from Jay Powell and the looming recession, how low the current sell-off will go. In this week's S&P 500 analysis video, we'll analyze the price action of the indexes, the 10-year yield, US dollar, oil, silver, and gold, the semiconductor sector, the home builders, the retailers, and the biotech. In addition, we'll also do an update on Apple and Tesla and see where they are headed, as they could influence the direction of the market. Stay tuned. Let's start looking at the indexes and see how they performed last week. As you notice, every one of them have lost ground. Yes, last week they are all negative. And looking at the worst indexes, lost the most. The Russell 2000 and the Nasdaq, they lost more than 3%, with the Russell at 3.82%, composite, the Nasdaq composite 3.62%, and the Nasdaq 100 3.3%. The S&P 500 2.93%, almost 3%, and the New York Stock Exchange 2.5%. Dow Jones Transportation 2.25%, and the Dow Jones Industrial almost 2%. And looking at the last week's performance for the S&P 500, we notice the range have expanded to 149.87, almost 150-point range. Now, that's not surprising to us because last week was the FOMC announcement, so we do expect the volatility. And like I said earlier, it lost almost 3%, lost 130 points. Now, it is closing below the 10-week moving average, but it is above this 40-week moving average, and it broke down from this inside coil. Remember, we're looking at this inside bar within an inside bar. So right now it's forming an intermediate lower low, lower high. So we'll see if it come down to this level somewhere around 4,200. And we'll take a look at these indexes, price action in a little bit more detail later on in this video. Now let's take a look at the market sentiment. Notice that as the S&P 500 came down, we see the VIX also move back up, but it's still under this 20 level, under this zone here, 20 and 30 level, although the market participants are showing a little bit more fear, but they are not really fearful yet, not to the point of panicking. But the put-call ratio is getting close to that 1 level, sitting at 0.92 on Friday's close. So we could see a little bit more of risk off in terms of the put-call ratio. So we kind of have to watch to see will this VIX in the coming week move into this 20 and 30 zone with the put-call ratio get above this 1 level. Once you get above that 1, we could see a little bit of acceleration on the downside. And usually when we stay above 1, like here on these spike, we typically get a climatic low here, or a little bit of a bottom or near-term low. So just keep an eye on these extreme for the coming week. But again, we need to see the VIX to come into this 20 level and move above that 20. And look at the internal, starting with the up-down volume ratio. You see the day after the FOMC announcement, we saw a huge sell-off, and the up-down volume ratio was down at this minus 8.6 to 1 in terms of the down volume. So that was pretty negative, and a lot of selling pressure on Thursday. And also looking at the daily advance decline, it was over 2,000 more declining issue than advancing issue on Thursday. So again, we are looking at a broad market sell-off on Thursday. Although on Friday, we kind of got a little bit of a pause there, not much happening there. But nevertheless, the S&P 500 was down almost 10.25% on Friday. And looking at the New York Stock Exchange new high, new low, we see that there are more new 52-week low than 52-week high, and that seems to have expanded. On Friday, it was 160 more stock make new 52-week low than 52-week high. So that is not a good sign, as this more stock is making new 52-week low. And for the cumulative AD line, we are noticing that it is turning down now. So along with the SP 500, we are not seeing any negative or positive divergence yet. So we just keep an eye on it to see how it will play out along with the S&P 500. And here, looking at the NASDAQ 100, we see the NASDAQ market also had a sell-off on Thursday with a up-down volume ratio of 3.67 to 1 negative. That means 3.67 to 1 in favor of the down volume. And also the advanced decline, the daily advanced decline was 2,000 more, a little bit over 2,000 more in the declining issue than advancing issue. So again, it was a pretty broad market decline on Thursday. And for the NASDAQ market, we notice that is the new 52-week low versus 52-week high really expanded on the downside here. And we see that there is 334 more stock making 52-week low on Friday. They're making 52-week high. And on Thursday, we actually had 424 more 52-week low than 52-week high. And once again, the cumulative AD line is telling us that the NASDAQ market is pretty weak, but while the mega cap tech stock, the FANG stock, is still holding up the NASDAQ to some degree. Notice that the negative divergence, we're looking at a much more steeper negative divergence now. See this here on the AD line, actually made a lower low, a new low, multi-year low here, while the NASDAQ 100 is still sitting up here and above this pivot low here. So definitely that is not a good sign if you're a bull, because anything could happen. And as soon as this thing starts to accelerate and try to resolve this negative divergence, we could be looking at a quick sell-off on the NASDAQ 100 or those mega cap FANG stock. So from the market sentiment and also the internal, we see that the market participants are getting a little bit more fearful now, although they are not panicking yet. But the put-call ratio is getting close to that risk-off level. And also the negative divergence between the NASDAQ AD line and the NASDAQ 100 is getting wider. So that is getting a little bit dangerous. And so I'd be careful about those mega cap tech stock. That's basically what's been holding up the NASDAQ 100 and to a greater extent the S&P 500. Look at this yield curve. We're still seeing the yield curve inverted sitting at minus 0.678, although it came up a little bit, but still it is pointing to a U.S. recession. And here looking at the 10-year yield, remember I was saying that we'd be watching the 4.5 to 5 and possibly even 5.5% level to get tagged before this cycle is actually over, although a lot of people were looking for a rate reduction to occur soon, but I doubt it. Like the last FOMC announcement, the recent FOMC announcement, the dot plot clearly indicate there's going to be at least a couple more interest rate hike, and that will place this thing somewhere around that 5% area here. Now, if we take a look at this weekly chart, you can see this 10-year could be coming up to this pivot high here, somewhere in this area near 5.25. So I wouldn't be surprised before this rate hike cycle ends, we'd be looking at these level here up at the 5.25. And here we also notice the dollar came up as well, coming up to this 105.83. And looking at the dollar index future, as you can see, it is approaching this 105.845. Now, once it breaks through this zone, I expect it to come up to this high volume area, and that would place it somewhere around 106.60 area here. So I wouldn't be surprised to see the dollar come up to these levels. Looking at crude oil, you see crude oil came up and actually hit a high of 92.43, so almost 92.50 level. I'll be watching it to continue to push up and possibly get up to this 96 level. We're starting to hear some soundbite about this $100 level. So be watch out for that possibility, because this is up at this low volume node here, and that could be a little bit of a magnet that will pull the price up to that 100 level, then get a sell off back down. But right now in the near term, I'd be watching this 96 level here. So there is a intermediate somewhere around this 93, but I'd be keying off on the 96. Would we get a pullback? Sure, we probably could get a pullback, maybe back down to this 88 and then continue to push higher. But I think right now oil is on a trajectory of moving higher. For silver last week, even though the dollar moved up, silver did get a nice little bounce here. So look for silver to see if we'll be able to come back up to this composite point of control at 24.20. And if it could get above this, there could be a possibility of making a move toward this 25.50 area here in the coming weeks. So, but if it get rejected and pushed back down, once again, we'd be looking at this 22.75 area. We see gold is still chopping inside this high volume area here. So right now, we're basically looking at gold sitting right at the composite point of control. And if it could break this trend line, move up to this 1970, 1985 area, then there could be a possibility of moving back up to the 2000 level in the coming weeks. Now, if it is unable to get up to this trend line, break through it, then we could see it retracing back down, possibly to this 1902 area to test for potential support. And that's basically at the lower boundary of this balance area. Let's take a look at the price action of the indexes, starting with the SP 500. Notice last week we saw a gap down here between Wednesday and Thursday, and it gapped to the lower range of the expected move. Remember, we were talking about watch this pivot low. If it breaks this pivot low, we could likely see it move down toward this 4200 level here. And the first thing is this trend line here to see would it be able to find some support and get a little bounce off this trend line. You also notice there's a little bit of a small gap. See, on Friday, it actually came down and took out this pivot high here. Now, looking at the coming week, this is the expected move that the market put in, and here are the ranges. On the upper range is looking for a possibility to come up and fill this Wednesday, Thursday gap, or it come down to this trend line here on the lower range and also fill this gap here. So the 4200 could be in play next week if the price continue to push down toward this trend line. And who knows, it might do a little bit of a full range move. It could push down to the 4200 down to this trend line, get a bounce, and that cap bounce pushes back up to the upper range of the weekly expected move and fill this gap, or vice versa. So just kind of be on the lookout for these possible scenarios. It could come up, and then try to fill this gap, get rejected, and then push back down toward this trend line here. So those are the few scenarios to keep an eye on and watch these upper range and the lower range price level. Now for the Nasdaq 100, we saw it came down and broke this 14,800 area, but it's still holding above this pivot low here. So right now, we are still not seeing this lower low yet. So for the coming week, watch for this pivot low to get taken out and come down toward this 14,250 area and then see a bounce back up. So watch this pivot low once again for this coming week. And for the Russell 2000, remember we were talking about coming down and fill this gap here once you come down to this below this 1800 level and get into this 1775 area. So you can see that it is trying to fill this gap right now. So in the coming week, we'll be watching for this gap to completely get filled and then possibly work down toward this 1720 area to fill this gap here. And here looking at the Dow Jones Transportation, remember back here, we're basically looking for this inverted head and shoulder breakout and possibly this 80% move up at 18,000 area. And that would be getting it close to the all-time high, which is a little bit of a wishful thinking, but hey, that's what the chart tells us, and that's basically what we put up, right? So right now, you see it came back down to this neckline here on a series of lower low, lower high. So for the coming week, we'll be watching to see would it come down to this 14,600 area and see would it get a bounce back up and come back up and back test this 15,300 level, or would it just continue to move down toward this 13,460 area here. For the Dow Jones Industrial, we saw this pivot low got taken out last Friday here. So right now, we're basically looking to see what it come down to this gap at these 33,273 area, fill this gap here and see what it get a little bit of a bounce, back test that gap and push down to this 32,567. So unless it could get back about this 34,277, still we need to contend with this trend line here. So right now the Dow Jones Industrial has formed a lower low, lower high. So we'll be looking for the next lower low, and that would be possibly down here near this gap here, this 33,273 area. For the New York Stock Exchange Composite Index, you see that it took out this pivot low here. So once again, it got this lower low, lower high. Watch for this pivot to get taken out here at 15,441. So if it come down, look for this gap to be in play, and that will push the New York Stock Exchange Composite down here at 15,174 area. So we'll keep an eye on this downward move on these level here, 15,440, 15,170. Let's take a look at the diamond, the ETF for the Dow Jones Industrial. You can see that the expected range last week is down here, and the price actually closed below this lower range of the expected move, and also broke this trend line here. So right now, we're basically looking for the price to possibly come down and check this composite point of control here near 338 and 29. But if we take a look at the next week's expected move ranges, you can see that the lower range is down here at near this 331.98, basically this gap fill. So we could see the price come down and try to fill this gap if it moved below this 338.29. Now, if we do get a bounce, then look for it to come back up and possibly backtest this trend line. And that's where the market is pricing it in on the upper range near the 344 area. Looking at the SPY here, the ETF for the SP 500, notice that we saw a couple of these trend lines got broken here, and it came down below the lower range of the expected move. As a matter of fact, it just gapped through it. So right now, we are basically looking to see would it be able to come here and this little high volume area and see would it be able to find support. Now looking for the next week's expected move, and the range is actually came down. The low range is actually below this trend line here, and essentially looking for this gap fill. And the upper range is actually come back up and fill this gap, the Wednesday, Thursday gap here. So we're basically looking for the possibility of coming back down to this trend line and check if we'd be able to find support and get maybe a bounce back up. And who knows, it might go through the entire range of the weekly expected move and come back up and fill this gap. Now, remember last week we were talking about watching this pivot low here. Then we break this pivot low, then we have this lower low, lower high type of a pattern. So we could be coming up and form this lower high here and then come back down. So right now, I think we are basically watching this 420 level here as a key level to watch for the coming week. Look at the QQQ here, the ETF for the NASDAQ 100. We're looking at this pivot low here last week for this thing to come down and take out this pivot low, similarly to the SPY. And right now, it is still sitting above this. So we'd be expecting to see next week to see what it come down and take out this pivot low here and possibly come down to fill this gap. And that was also be putting in a lower low and a lower high. Now, for the coming week, the expected move, the ranges for the expected move is up here on this gap fill and also coming down right at the edge of this particular gap fill that we're looking at. So for the coming week, we'll be watching to see would it come down to this lower range and possibly get into this gap here, and maybe we get a bounce back up. So watch this coming up to get a little bit of a dead cat bounce, fill this gap and possibly push down. Or the other possibility is that we'll get a continued move down and come down here and possibly get a little bit of a reaction and push back up here and then push down. So we get a lower high, lower low in this type of formation. On the IWM, the Russell 2000 ETF, you see that it is trying to come down and fill this gap now. It almost completely filled it, but it's still got a little bit left. So for the coming week, I wouldn't be surprised to see it come down and actually fill this gap and come down and test this trend line or this composite volume point of control near this 172. See that the price actually went below the low range of the expected move from last week. Now for the coming week, we'll be looking at these ranges, and you could see on the upper range is basically coming back and possibly fill the Wednesday, Thursday gap, or it come down to this trend line here on the lower range of the expected move near this 172 area, and also this composite point of control. So for the coming week, I'd be watching for this gap to get completely filled and then possibly come down to this trend line. Then we get a bounce back up and see would it get a bounce all the way back up to the upper range and complete and also fill this last Thursday, Wednesday gap. So that will be the price action that I'll be keeping an eye on for the coming week on the Russell 2000. Let's take a look at some of the sector here, starting with the semiconductors. We see the semiconductor broke this trend line and also this pivot low here. So right now, I'm basically watching the possibility of come down to this 134 area. Now, we could see a back test and try to come back up to this trend line. And I would say I would look for the possibility of sell the rip. And for the home builder, we finally see the home builder turning down. We've been seeing the home builder been moving up during the rising mortgage rate. And a lot of people don't understand, a lot of the recent closing sale is basically with a lockup rate that happened 6 or 7 or even 9 months ago. So the mortgage rate of today will affect what's to come, not what is happening now. So as you can see that it broke this pivot here. And right now it's coming down to this trend line. And I wouldn't be surprised that it's going to come down to this 73 level. Yeah, we probably could get a back test and possibly come up and fill this gap. But again, similar to the semiconductor sector, I'd be looking for the possibility of selling the rip. And here looking at the retail ETF here, we see that the retailer is also getting weaker now. We see that it's coming down. Wouldn't be surprised to see it come down to this 56.28 on this XRT. Basically, it's the retail ETF here. And here's the biotech. You see the biotech came up and kind of bumped against this resistance here at 138.21. And it's pretty much inside of this balance area. So I wouldn't be surprised to see the biotech come down to this 120 level here. Then if it breaks this level, then we could see it, come down, slide down to this 112 relatively quickly because there's not too much volume here. Okay, so that could, come down quickly and get down to this 112 level. Let's take a look at Apple. We'll notice Apple last week, the range is between this 180 and also 170 level. And it did make a move toward this upper range of the expected move. But at the end of the week, it closed right back near the middle of the range. Now, looking at the coming week, the expected move, the range for the expected move is not that much different from the previous week. So we're still looking at the upper range somewhere around 180 and the lower range somewhere around 170. So what we're going to be watching for is for the price to see would it come down to the lower range, because we have this little bit of a declining channel here. So we'll be looking at this possible move down to this 170 area for the weekly expected move, the lower range of the weekly expected move. And basically looking for the price to continue to chop inside of this high volume area. And that's what the market is pretty much pricing in inside of this range here. So basically watch for the 180 and the 170. Now, if it breaks the 170 level and come down, then we'd be watching for this high volume node here at this 164.45, this area here. And that would also place it right near the bottom of this channel, this trend line here. And looking at Tesla, remember we were looking at the possibility for it to come up and bump up against this trend line here and it get rejected back down, or see would it be able to break this trend line. As you can see, it did not play out in that scenario. Instead, it came down to the lower range and filled this gap, and we're saying that until Tesla break this trend line, we're still looking for Tesla to move back up in a uptrend sort of fashion. So right now we are looking for the possibility, would it get a bounce back up, or would it continue to come down and move toward this trend line here. Now, if we look at the expected range from the market for this coming week, notice that the lower range is pretty close to this trend line here, and the upper range is pretty much right near this high volume node, this composite point of control here. So we could see a little bit of a bounce back up to this upper range and it get pushed down into this trend line here. Now, if it breaks this trend line, remember we're talking about this pivot low here, and if it breaks that trend line, then we essentially could be looking at a lower low formation. And if that occurs, then we're basically looking at the possibility of the price coming back down to this 170, 169 area. So watch out for this trend line here in the coming week if Tesla decide to continue to push lower. So because there is a gap here, once you fill this gap, then basically book this trend line and it could be coming back down to this 170, 169 area. In summary, we are seeing more fears and caution from the market participants, and the internals are turning more negative. Until the sentiment and the internals improve, we'll likely see the S&P 500 continue to pull back to 4,200 or 9% from the July high. If you find this video to be useful, smash the thumbs up to help promote this video on YouTube. And if you are new to this channel and like to continue to watch these contents from me, click the subscribe to support this channel. Thank you for watching and stay safe.